Good morning, folks. How's everybody doing out there? Here comes Jackson. Here comes Jackson. Good boy, Jackson. It's okay. Do you want to make an appearance? Well, look at this. Look at this sweet boy. He is just so sweet, isn't he? Okay, Jackson. Calm down, buddy. Luckily, I remember I put food in his bowl prior so he can go over there and eat manically if he wants while he's trying to figure out who I'm talking to. All right, I had a good live stream last night. I wanted to thank everyone that was there. We had some good contribution last night on questions for Jay, both in the live stream, potential questions, lines of questioning for him. My interview with him is on Thursday of this week. But also I was going to say in our Discord, we had some follow-up ideas overnight. And I read them all this morning, and I really like them. I'm thinking maybe I'll make slides like other influencers do. I don't know. Do you think I should make a slide, and then I could put, here's Bob. Bob from my Discord is asking, what's the matter with the nav of XYZ phone or whatever, Anyway, it might be kind of something fun to do. All right, so let's look at the market. I don't even think I have it open right now. There it is. I was looking at Cardano last night. I have a buddy that's a Cardano guy, and I was taking a look at that thing last night. Anyway, all right, let's go over here to S&P. All right, here's the daily chart. I haven't been happy with my charting lately. I guess I just don't like the daily time frame. To me, just doesn't show me as much as the 30-minute. I just prefer this time frame. Okay, well, the important thing on this chart is the election night price, that's where the election night gap ended. So the next morning we opened there and went up. That's the other side of the election. That's, so that's important to me. That's kind of, to me, a referendum on the current administration. As long as it's above this, things are going well. But whenever it takes back the election night price, and then gosh forbid if they take back the this red line. Well, I guess the red line's the bottom of that election night gap. So you can see they got into it, even went through it a couple of times, but buyers have still been there so far. This is the next place on the S&P I'm looking to buy the dip is 5,700, something like that, and then below that 56. I don't know. By then I might be switching, but 57 looks like a viable dip. And probably 56 as well. I'm too zoomed in on the 30-minute time frame. Okay, so but basically the market's not moving. I mean, down 20 cents. The Nasdaq's down 1 cent. Bitcoin's down almost a point. 10 years 4.4. Nothing to worry about. It's down a little bit. VIX is up. VIX is elevated, and in fact, VIX made a on this time frame, and this isn't that helpful, but VIX made a bull cross in this time frame, May 28th, indicating that if you follow the trend of VIX, that it's trending higher since the 29th, at least on this time frame. Now, I'm sorry, that was a bearish cross. All right. Well, anyway, above the green line is bad. Below it's good. Right now they're below it, I guess. But whenever it's above it, that's definitely bad. Let's look at VIX. This is the VIX of the VIX, the volatility of the volatility. Same thing here. Whenever it's going up or above the moving average, it's bad. I mean, really nothing to see here. It is up a little bit, 2%, but I mean, you can see on the chart, it's not even close to make a, it's not even, well, I guess it just crossed from bull cross to bear cross and then back to bull cross. It's just in whipsaw mode is what I'm trying to say. And that's the worst thing for a trend following system to happen. Anyway. All right. So not much trend, in other words. All right, let's look at some other stuff. Okay, I made new max factors today, and I'm getting ready to do my own model portfolio today. And and I've been trying to decide for about a week what to buy, and I've been thinking about Snowy. But I'm also, just this morning, I was really started thinking about NVW. I mean, it's early on NVW, but now I already have some GDXY. That's been a good hedge, but lately it hasn't been hot. In other words, it hasn't been hitting the max factor because its momentum has been off, but momentum's kicked back in. In fact, let's look at that. I guess maybe it had something to do with the bombings in Russia this weekend. Maybe I don't know. LG, mini criminy, I hadn't seen that yet. Holy cow! Okay, now GDX is gold miners, is not gold, but it's still influenced by the price of gold. Holy cow! Okay, well, boy, that's looking good. I wish I had more of that. So my portfolio was up today on the day the market was down. We'll look at my portfolio. It was up 30 cents, and I couldn't figure out why. 30 basis points. I couldn't figure out why. I was just looking real quick. But yeah, the GDXY probably has a nice gain. Even I don't think I have that much of it, 10 or 15%. But anyway, it's helping out. All right, well, that's good to see. That's really good to see. So weaving back to the max factor. Now, this comes from the high yield TNA spreadsheet, high yield technical analysis. And what this does is I line up everything in the universe that we talk about. I'm not just into yield max. Yield max is the main one, and Defiance, but I mean, there's a ton of good ones. I mean, Round Hill, ProShares, Granite shares, iShares has some good ones. Anyway, so they're all in here. So what I'm looking at is I'm looking at the relative momentum. Which one has more momentum than the others? The relative momentum. So that's factor A, I guess. That's max factor, I'd say. But then also but it's not. You can't just look at the momentum. The momentum has to be relative to the volatility of the asset itself. So once I normalize for the volatility of the asset itself, and then once I factor in the yield of the asset, I get a final factor called the max factor. Anyway, last night this spreadsheet wasn't working, but they all updated. I paid for a terabyte of storage last night, and I also have a month free of Gemini AI. I'm hoping Gemini AI can help me on some of my spreadsheet things, and I think it can, but it took me a while to learn spreadsheets. I watched a video on Gemini AI last night. It's going to take me, I could spend the same amount of time just learning how to use a spreadsheet, learning how to do the right thing in spreadsheet. In other words, Gemini AI is a skill itself, but it does appear to be a big time saver. And I'm hoping to use it for all kinds of interesting stuff for you guys. I'm hoping it could just publish live I want this to be live every day to our Discord, or maybe start a Patreon or something, or a Substack. But I'd like to publish some of this data, on a live, so everyone can evaluate it, and maybe even just share the data, and you guys can crunch the numbers yourself. Or this is all publicly available stuff that I just mined off of FinViz, but you can mine it off Yahoo Finance or whatever. But anyway, I like this kind of stuff. So bottom line, though, on this is this is the June 2nd. This is the June 2nd chart. We can look at the worst ones, but they aren't necessarily the worst. I'll tell you why they're down there. Because their parent asset is out of favor. And they might also be bad, but they aren't necessarily the worst. GDXY was down there on the worst list a few weeks ago, or closer to the, so this is just trying to, I like what Dorsey Wright's doing, but I wonder if a person could do a Dorsey Wright strategy and just try to stay in the hottest funds. And so this is my Dorsey Wright. This is the max factor. Anyway, I'm really proud of this. I'm really glad this started working again. Okay, so I don't have the Misty trades fully updated yet. But I worked some last night, and I'm hoping to get a lot of the automation done in Gemini. That's how I got on Gemini. So I still haven't caught up on the Misty trades, but I know they're coming up on the dividend. I'll get them caught up in time we'll take a look, and we'll see if we can I mean, I have no experience guessing. I'll let you guys help me. We'll see if we can look at our data and from our data see what it's telling us. We can also look at Palti the next week after that because I've been keeping Paltis. I thought it might be fun, but in any event, all right. So that's good. If you guys have any questions, we can talk about questions. But I really want to say to all the people that are there last night, thank you so much. It was a great time. I really appreciated it, and we got some great questions. There's Mark. How are you doing, Mark? Well, it's good to see you. All right, so let's look at some other stuff. We're going to talk options for a second. Okay, expired or closed. We looked at those last night, how the ones did. These are the ones mostly from last week. You could see hit and miss. Hit and miss when you do options. The way I do them, I have a little bit more winners than losers, but sometimes you have a big loser like this $920 loser. So anyway, it's not scientific. It's just a spattering of ones that you guys said, hey, do this trade, do this trade. I do this trades the same way every time. So I win about 2/3 of the time, or about 70%. But the losers can be big, but I have a way to control that, but still you can't, there's no free money. So you can't, so anyway. All right. Well, that's last week's trades. We looked at that last night in case anyone's interested in how any of those came out. We're doing something just for fun. Do not do this. This is probably what not to do, but we started talking last night about if you could hedge Misty. And so I gave this out as an idea to try to get the next two. This is if you had $100,000 account, you could put this on, and and the next two payments are going to amount to around $6,000, but it's going to give you some downside protection. If you're going to offset some of your downside in the last 2 months, it's made to capture the next two dividend payments from Misty. But anyway, like I said, I started doing it. Then I started saying, well, don't do this. We'll just paper trade it. This was, I was a little bit bearish on, I thought Bitcoin got ahead of itself, and I gave this out to someone as an idea on how to play a downturn in Bitcoin. And I liked it so much, I did it myself, and it was a small winner. I made a couple $100. I took it off. So this big loser down here that's one of Jay's trades. It's one of, in other words, it's one of the trades that one of the funds made. But anyway, I'm just trying to see if Mark missed anything from last night earnings. We don't have how do we not have any new earnings ideas? Oh, it's because the market was closed last night. All right, let's just do one really quick. Let's do Broadcom or Lululemon, or DocuSign maybe. I'll start it. I got signed out of this. Come on. All right. Well, Lulu, DocuSign, Internet of Things. The Thursday afternoon's the prime time. I think $100 is the prime price. Here we have DocuSign at 87. If it has a high IV, I think that's the one. But we were looking last night. It didn't look like it had a lot of liquidity, but that was based on Friday's close. Now the market's actually trading. Yeah, now there's plenty of liquidity, of course. All right, because we were looking at Friday's closing prices. Bid at 460, asked at 480. I like the math of this one. Let's see how far we can scoop the odds in our favor. That's all I'm trying to do, is create the most favorable percentage play possible, while at the same time preserving, call it half upside, preserving a portion of the upside, at least half. All right, so this 80 isn't super liquid. Bid it. Let's see if we can slide down to this 79. Well, like always, use caution if you put these on yourself. I know Mark and the other 4 people that are watching know exactly how to do these, I'm sure, because you guys watch every morning. There's no casual max watchers. You guys know where I always say to put this, and I mean, there may be a better way to do it. I put it at the market maker expected move. So all I want is if it beats the market maker, I want a piece of that action. That's all that is. And what else I do the reason I say I want half upside is because usually what I do is I'll sell to, it'll be like a half. It's like a half risk reversal because I'm selling 2 and buying 1. You know, a true risk reversal, one thing you wouldn't have this other put. It would be unlimited risk. A true risk reversal or a combo, you're just gonna buy a call and sell a put. But this is modified because I don't want unlimited risk. I mean, $1,000 is about right. I can take $1,000 risk. If you give me 194 right now, I'll take $1,000 risk, and especially because you're also going to give me a 5.3% head start, and it's earnings this week. So there's always a chance that this company could do something great and could beat earnings or not. Now let's see how much stock this equals. The reason I say about half upside is, like I say, because you have 2 puts and 1 call, so you're getting some upside. You don't have to do it that way. You could do 2 puts and 2 calls, but you cut into your income. Then you can no longer take your wife to dinner. You got to tell her, hey, honey, we aren't going to dinner tonight, but if this hits, we'll go to dinner, this weekend. The money will be in the account Friday. I'll close this, Friday morning. Money's there instantly if you have margin. So we'll go to dinner after we hit this. But I generally like the idea of selling premium. Selling premium is generally the right way to go. And this is my compromise. You can also do it you can do 3 puts and 2 calls, and it makes it a little bit more aggressive. Anyway, but that's actually a good trade. A good trade mathematically. I'm going to save it, and I'm going to copy it and give it to you guys for watching this morning. If there's anything you want to do, Lunar's a casual. There is some casual max watchers. Lunar is one of them, but most of the max watchers are option hounds that talking about strikes and deltas. No, I'm just joking. And that's the way I like it. That's kind of what I'm catering to on the channel with the high yield. I kind of use the high yield funds as a way to talk about options, because my interest in the high yield funds isn't limited to the high yield funds. It's a broader, and I really like meeting you guys in here, guys like Mark and SB and VR that are basically running your own versions of Yield Max. I love that. I love that you guys are doing that and saving the money. But plus, what I like about it is, and that's why I always emphasize a fun account. I have my $20,000 account because that won't mess up my retirement. But that to make earnings trades in there and to try to do my own, to try to run my own income strategy, but at the same time where I can get upside. I can do it how I want, But anyway, for a lot of people, I really think a lot of people could just go buy QDTE or whatever Q, pick a Q, QILD, just pick a Q, and then go buy 20% Y triple Q and have a great retirement and a great life. I was just watching an old Jay interview from about a month ago, preparing for my next Jay interview. I forget the guy's name. I think his name was Rob. He's an old market maker. He's an option market maker. Now he's kind of a Bitcoin guy, and he manages money. And they were talking about Michael Saylor, a bunch and stuff. Real good video. But Jay was saying, and I totally agree with this, that he just does not understand why people don't get Y triple Q. They thought it'd be adopted more. All right. Well, thought I had some other stuff to talk about. Okay. So on the max factor, did you notice that Dizzo hit the max factor? When's the last time that happened, and how the heck did that happen? Well, I pulled up Finviz because it's just mining data from here, and I don't have time to check the Dizzo chart. I don't think I'm going to get Dizzo, but I'm saying, my Lord, Dizzo's on a monster run. Look, it's 2% above its 20 period moving average, 7% above its 50 period moving average. This thing's killing it. Anyway, but this is an example. When something pops up with momentum, my thing's more like a momentum screener. I'm just trying to get in early on the ones I want to get in. Like I say, Dizzo's probably not on that list, but NVW, I'm back and forth between NVW and Snowy. Maybe even like one of the Tesla ones, now that Elon's back. for the most part. There's so many good ones out there. NVW didn't show up. Hang on. NVW may be too new. Oh, no. I typed in the wrong word. Oh, no. NVDW. Is there no NVW, or am I confused? That is Round Hill. Huh. Okay. Well, so doesn't Round Hill have a TSW, or is it a TSDW? What's the Round Hill for TSLW? Round Hill weekly pay. So the NVLW probably wasn't available, so they used I don't know. Anyway, I have to make that decision myself. But I'm glad. I was discouraged that the account was doing so bad. I was down 20%. But then as soon as I started actively managing it, the account came back, and I'm only down 6% today as of this morning. So let's look at what the market's done since, or let's do it like this. Well, let's just run the SPY since the day let's just look at the SPY versus the Qs. That's fine. But I just want to go from the day I invested, which was to try to see what the SPY and the Qs were up. It was December 12th, I think. December 11th, something like that. Right about at the top for the tech market. And I loaded up on, remember, I got Square and I got NVIDIA and I got all the ones that had been good, and then rode them all the way down. Misty, I had them all. Now, Misty's come back, but I didn't know that. All right, so here we go. So the market is down. I'm down 6%. The market's down. If I would have passively invested in the SPY or the Qs, if I would have taken my brother-in-law's money and said, no, we're just putting in the SPYs or the Qs, we'd be ahead right now. So, but in any event, I'll catch up. I'm going to be beating the SPY and the Qs badly soon. I just got off to a rough start. I took anyway, whatever. Anyway, if there's anything you guys want to talk about, we can. They switched from TSW and NVW to TS. Okay, perfect. And NVDW. Well, that's good to know. All right, guys. Well, like I say, in the absence of anything else to talk about, I'm going to let you guys go, and I'm going to go get in the middle of that Gemini AI and see if it can strain out this. See if it can strain out these Misty trades. Boy, wouldn't it be nice? And I know it can. I just need to figure it out. Wouldn't it be nice if I didn't have to work that hard? If it took 10 or 15 minutes, I'd be fine. I was literally taking 2 hours a day to do the trades. But if it could take 10 or 15 minutes and it just downloads the trades automatically and just does that simple computation on it, shows us what we sold short, and it just computes the gross, the net premium. And then we just take the net premium and divide it by the net assets. And it may not be as good as what Rod's doing, because Rod will take it down to an option by option level. Rod will say, well, they got killed on this option, they had to roll it. And that's fine. That's not for me, but we can still take the debits and the credits and have the same bottom line. I mean, we should be able to. That's my idea. I'm trying to give you guys better service as far as dividend prediction and that kind of more fun data. Maybe we could, I'm trying to do a better job of generating the data. I think the Max Factor is a step in the right direction too. And I'm going to get that published to a page somewhere where we can access it. Or I tried to just publish it to Discord, but it doesn't do it live. I need to figure out I want it to be like a web app or something. I want it to be like an interactive dashboard that updates. And there's all these videos on how you can do it. I just never can seem to figure it out. Anyway, Coaco, I prefer buying gold or something like GDXY and stuff. So that's fine too. And you don't, I've said this before. You don't, another idea is, hey, I'm not going to hedge at all, Max, because I've got my, I have some high yielders, but I have the right percentage where I'm comfortable with the risk. In other words, let's say a guy has 95% of his account in growth and then 5% of his account in high yielders, and he elects not to hedge. That's another option, because his hedge is, I'm just going to stay small, or say he just has 2% or something. But then let's say that maybe his wife wants to quit work, or let's say they want to buy a lake house, or let's say they have some goal they want to meet and they've done pretty well, and they want to move some of their assets into some income producing assets. Very, typical thing for people in their 40s or 50s to do. I really think that makes a good case for these funds. But you don't have to hedge directly like with YQQQ. You can hedge indirectly by buying a non-correlated asset or a less correlated asset like GDXY. I have TLTW for that reason, and also because stupidly I thought bonds would rally. But yes, I use TLTW. So, like I say, and really probably, I mean, I go back and forth on really if a person even needs to hedge. I like to do it. It matches my personality or whatever. But really, in other words, I'm saying here's another hedge. Another hedge is just stay small. If you have $50,000 you want to put in high yielders, put 30,000 in it and put 20 in a T-bill or something for 6 months. You know what I'm saying? Just stay smaller. Then if the market pulls back, you can take some of the 20 out of the T-bill and make some more and buy the dip, but you aren't locked into one price. If my brother-in-law would have given me a larger amount of money to work with, that's the way I would have done it. We would have done exactly like that. But this is just a proof of concept thing. He just kind of wants to see how they work. He's heard all the hubbub and just kind of wanted to see how they work. So anyway, I'm going to buy him either some Snowy or something today. I guess I got to figure out what that is. All right, guys. Well, I appreciate you all for being here, and I'll be back later on in the day. All right. I'll see you later. Oh, Coco, I just saw that message. Let me look. You sold all your bonds beginning of April. Best decision this year. But yeah, so I didn't sell them. It's a small position. I didn't sell them. It's non-correlated. But I've thought about dumping them. Because I want to get in something that's making money. Like what about Carvani or Snowy or something? Something more techy. But anyway, it's just I think it's a good idea to hold on to the small allocation of bonds. And I'm definitely holding on to GDXY. Those are definitely great indirect hedges. All right, Mark, thank you for being here. Mark says later, Max, hedge now is 400 SPY shares. Yeah, that's another. Hedges can be direct and indirect. And a hedge can be something as simple as I have some more cash in my pocket and I'm willing to buy the dip or whatever. In other words, just don't go all in, I use the halfway solution on all that stuff. If it would have been a larger amount of money with my brother-in-law, I would have said, okay, we're going to put in half now. And then I would have laddered the rest in somehow. But anyway, it's fine. All right, guys, I appreciate y'all for being here and I'll talk to you later. All right. See you.